Hello and welcome to Risk Talks. My name is Edward James and I'm the founding director of RCQ Associates, the risk, credit and quantitative recruitment specialists. Today I'm joined by Cosimo Pacciani. We're very lucky to have Cosimo join us today. He's the former group COO of Algebris. He's the ex-CRO of European Stability Mechanism and he was previously the head of risk and compliance for the asset protection scheme at RBS. He's got more than 23 years experience working in finance, working for different financial institutions, mainly in the City of London, and all focused on risk management. Welcome, Cosimo.
Hello, Edward. Welcome. Thank you very much for the invite and happy to be here with you today.
No, that's my pleasure. It's good to be speaking to you, and I think we've got some really interesting points to discuss today. So today we're talking about the European response to coronavirus, lessons learned, and looking into our crystal ball and what the future has in store for us. So if I start off with the first question, Cosimo, also broken down into two really. One, can you talk me through where we are now? And two, can you talk me through what your thoughts are and the reaction to the coronavirus pandemic from a financial perspective?
Yeah, I would say at the moment we are, and it's under the eyes of everybody, in what I would define a transition moment. I think we have been through in the last months from pretty much February to the summer to the first wave of the coronavirus with a huge impact on economic growth and employment numbers, and also on especially on the small and medium enterprises arena. We saw the effects under our own eyes. And now we are entering into a phase in which we are trying to understand if we are entering into a second phase, a second wave of the coronavirus that will be as bad as the first one, that will imply forms of lockdown as the first phase, or if there are ways in which we can control the contagion. So at the moment, there is a lot of uncertainty. That also could be maybe one of the main topics of today's chat, because we all live in a situation in which we are faced by an invisible enemy that we need to fight. And the way in which we need to fight it, they need to be pretty much addressed, like social distancing and also the lockdown itself. Have been demonstrated to be the most effective measures, but then they have an impact on the economy. And after we'll speak a bit about results. So the moment, if you look also at the forecast around, there are two scenarios. One is what if the second wave will be a much milder one, so there won't be any more lockdown. We can go back to a gradual recovery on the economy. Is defined like a long U-shaped recovery. Or what if we have a second wave that will be as bad as the first one with lockdown, and then we're going to be faced by an L trend of the economy with obvious consequences. We witnessed a dramatic decrease on GDP. If you look at numbers like from the UK, from Italy, from other countries, talking about like 15-20% GDP decrease year on year. In terms of unemployment numbers, they are still very high. In the US, they remain incredibly high, maybe the highest they ever had. So this is a situation where we are now. So it's a transition period. Then if you look in terms of response, and I will focus on the European and UK side of things that I know better, I would say that the response was immediate, because we know that both the Fed or the Bank of England and also the ECB in Europe, they used all the tools they had in terms of monetary policy to support the economy. The ECB launched a purchase program of roughly 750 billion. This is an amazing amount. Not talking about the Fed, I think we're talking about roughly over 2 trillion of bond purchase program. So pretty much they're buying everything is out there. So this was the first one. So monetary policy, I think there were all the right actions taken because we had the 2008 template. Then what happened, there were a series of interventions by the European institutions. Mostly the first one arrived, there was the support to unemployment, through a program called SAFE. Then we had the ESM that now can, the European Stability Mechanism that now can provide support members of the Eurozone through special loans to finance health expenditures. So it's a very limited target, but very important potentially for some countries. Nobody applied so far, but we'll see in the coming months. And then you have the Commission that also launched the Recovery Fund. Is another roughly 680 billion of intervention into the real economy. What I think is interesting is that if you look at the European response, is then catered to dealing with emergency, to calm down the markets, to provide the safety net to the member states for health expenditures. So the most important one at the moment. But there is also, I think, a strong focus into the future, because the Recovery Fund is aimed to investments that should support the growth, not only in the coming period of years, but for a longer horizon. And I think it's comforting to see this kind of long-term thinking happening together with dealing with emergency. Then if you look at the UK, I think it's a similar situation, meaning that the UK government had affordable schemes and a lot of support to the real economy coming. And this is, I think, explains why, to some extent, they say the social fabric in UK and Europe supported better the impact of the crisis. And also, therefore, the financial institutions, because we saw obviously an increase of delinquency and non-performing loans, but not as bad as without the support that was provided. So it's a transition moment, I would define it. And so we need to see what is going to happen in the coming, let's say, maybe a few weeks, if not months, to see if the second wave is coming or not, and what the governments will do.
So, yeah, I mean, it's going to be interesting to see. I think it's a constantly changing and evolving situation, both from a human perspective and a financial perspective. But can you talk me through what we talked about earlier in terms of velocity, so the pace of change? Can you sort of talk me through what your view is on that side of things?
Yeah, the way I see the pandemic crisis is that it can be compared to, let's say, a mix of a war situation together with a big difference. The difference being that the enemy that we are fighting is invisible. That is not. It's like it's a war, but fought with precisely with viruses or with radiation. So, to some extent, I think as always during a war period, we saw a lot of changes in, as I said before, into the fabric of society, because, thinking, for example, about teleworking, smart working, or people that could not go back to the office or use the transport, so they had to reinvent their own vital space, including the way in which they shopped for things. At the same time, there was a huge change in which the banks or the governments or the corporates started approaching the use of technology into their own businesses. So when I talk about velocity, I'm talking about the fact that we could see that is incremental speed of change from a technological point of view, because a lot of processes and a lot of things that we're doing before, it looks like we're putting more emphasis to have them automated, so to reduce the human footprint into the process itself. So it's down to then to technological changes, or, for example, using machine learning also for some of the services that we're doing, using robots to answer the telephone. I think all of us, we had the experience of speaking with the people that we realize after they are robots online, they're not real people, but they're also going through now more complex tasks on a telephone or online. So there's a sense of acceleration on this trend. Together, I think there are a series of other trends that are accelerating. Some are virtuous and some are not. I think one of them is that people, they have much more consciousness because of the difference between before and during the pandemic. For example, on the quality of our air or the quality of the environment, I think there is a marked desire maybe to live, to have a greener economy. And the European Commission is why it's launching this huge program to support that part. So I think there is a sense of ongoing speed of change that will have a much wider impact on society. And I think I'm going to speak a bit later about it. I think the issue is that we will need to see how then this will have a deeper impact on, for example, on the political side, because there was also a different degree in which the governments were able to respond or address the crisis. They may have, that may imply a political price to pay at some stage. I'm thinking more, for example, about the US. And at the same time is also how society then will change, and also some of the habits that we have, then with an impact on demand for some products or services.
So no, I mean, there's tons of interesting points there. I guess the government response and financial markets response to what's been going on has been interesting. I think on the whole good, but varied in parts. I guess if we actually skip on to the risk management specific side of things. So from what I'm seeing, it looks as though risk management may have a wider function. Do you see risk changing, and sort of how do you see risk having a wider remit within the sort of COVID and post-COVID world?
Well, for sure, the last month, there's been a testing ground for everybody dealing with risk management, for CROs, or risk experts, and also maybe for compliance experts, because then we can touch base a bit about it later. Obviously, also the increase of operations done remotely or from home, or they also have some kind of compliance aspect to be taken care of in terms of also data protection or protection of information or information security. I think the point is that from a risk management point of view, we had the template of 2008 for sure. What happened here is like 2008 on steroids, and that implies maybe first of all a rethinking about the role of risk management in some of the institutions, in some of the corporates. We can touch base about it a bit later. And I think there is also an element of the risk function to see how they can exploit more the technologies that now they're becoming more and more available in terms of using more algorithm-based calculation or analysis, and to look at ways in which the processes can be more automated in some parts. Therefore, you have less requirement for, let's say, low-level human work, but you can have more dedicated resources or human resources to look at the quality of the output and decision making. So from a certain point of view, I think it's a big challenge. It's a big challenge because then you have to pretty much revisit all the organizations and processes in light of a world that it has changed so dramatically in such a short period of time. Maybe something that I will do from a practitioner point of view, I will revisit, for example, the contingency plans and emergency plans, because most of the contingency plans were built for relocating people from one office to another. So maybe from the center of London to Kent or Stratford or wherever you had your contingency locations. But with the pandemic, it was a completely different scenario. So maybe it's also down to say, okay, what kind of likely scenario we need to be ready for, maybe adding 2 or 3 related to a pandemic-like situation.
It's been interesting with those sort of business continuity sites or out-of-town sites. I know some of them have been used, but I guess we're all, at least in the past, a lot of people have been stuck at home and not able to go out. And yeah, it's really interesting seeing in predictions for this year, when you look back to sort of December, January, about what the main risks and threats would be. I think it was a very brave person who was putting pandemic on there. I think that was certainly an outlier. But yeah, it's interesting to see where things are going to be. But from a risk perspective, what would you say the areas of most, or the focused areas are for risk in a post-pandemic world? So what are the areas that you think are going to be important? And of course, I'm happy to answer from a harrowing perspective about how things are. But yes, what do you think are the important areas for risk going forward?
Yeah, I would say there is a big variable here, and the big variable is how long do we expect the crisis to last? Meaning, is what I was saying before. So, is a transition to calmer waters, or we're going to have another spike? And then we also the issue about when the vaccine will be available, etc. And why I'm saying that? Because I think this is the most important variable for a risk manager. Because when you're profiling your risk appetite or your risk assessment, you need to consider that, for example, on SME space, what kind of companies or what kind of shock that we're going to witness on the companies we support or we are lending to. And so we need to understand what kind of companies they have going to have a short-term shock. Therefore, it's like they're pandemic victims, but we hope we can help them to recover. Or what kind of companies they thrived during the pandemic because the kind of products they were offering, services. Therefore, we may want to devote more resources to that. And then also how to manage the companies that not only are victims of pandemic, but they were also in some kind of really had troubles before. Therefore, we need to see if, for example, if you need to pump up our recovery functions to help these companies to go through this transition, preserving as much as possible, the business or the workforce, or to rescue them. So to some extent, it is really a function on how long we expect, because the longer the crisis will be, the longer the sense of uncertainty will be, and the longer the slump on GDP growth on the economy will be. I think the higher number of companies that could thrive after the pandemic will reduce. You will have more cases of companies that cannot survive even if they could in a short-term shock. So I think for me, from a risk management perspective, it's really down to having a very clear view about your portfolio, what you have, your credits, and your exposure. And at the same time, on the side, on the financial risk side, on the market side, is really about assessing the risk of a higher volatility in the market. Is under the eyes of everybody, apart from the last maybe few days, that there has been since April a big disconnect between the financial markets and the real economy. So we saw a huge slump on the economy, but then the financial markets, they continue to work very well, especially on the equity side. And on the capital market side, they were supported heavily by the central bank intervention and the public intervention. So as a risk manager, we may want to argue, okay, what if is our typical question as risk managers, what if conditions will change in terms of volatility? What if there will be less support from the government on some sectors, etc. So it's a fine art of trying to find the scenarios that could help them to drive the strategy of the institution we're working for. And yeah.
Yeah, no, it's really interesting to see what's going on there in terms of change. And I guess if we had to also touch on what your major concerns would be for the next phase, what would you say your main concerns are for the future and for the next phase? What are our biggest risks and threats?
Well, in the coming period, we're still talking about obviously the sense of uncertainty. And to be sure that the uncertainty doesn't become again panic, where we are able to move the dial of risk from what was panic and fear at the beginning of the pandemic to uncertainty back to risk management. So stuff we can manage, we know how to do it. And I think it is for me the first element of attention. The other one I think is what the change in society and how people behave and look at their life will have an impact also on patterns in terms of demand for some products and services, and also how people will change and approach once again to their life. Because the big lessons that we had from 2008 is that after people change attitude towards, for example, debt, they change attitude especially towards the relationship between themselves and the financial institutions and the government. if you look through the lenses of us political scientists, you may say that the wave of populism that we saw across the world was also driven by the aftermath of the 2008 crisis. So now in 2020, you may want to argue that there may be changes in which in a society there's more and more horizontal, will have more friction and conflict. I saw recently in a program of a conference, this conference for the first time spelled very clearly the risk of social unrest. And this is something I think we need to look after, because as players also on the financial markets, on the risk management, we want to understand what are the early signs of potential friction from the point of view. And I think another risk is to see what is the capacity of the government to keep let's say, the promise of having or supporting people through either support to the health system or support to the economy. And this is where I think there is a theme of trade-offs, of decision making that is coming bigger and bigger thanks or because of the pandemic.
Yeah, so I think trade-offs is a really interesting area in terms of, I guess, you can't have everything. You can't have a fully functioning economy with everyone all in the office, in the workplace, and being in large cities. So yeah, I do wonder what the trade-offs will look like and where things will be. But it's I think we've got an interesting future ahead of us.
Yeah, there is, because I can give you 2 or 3 examples of trade-offs we experienced during the crisis. One is between keeping people healthy, so lockdown, social distancing, closing shops and pubs and restaurants, cinemas, pretty much bringing to full closure all the entertainment industry to preserve the economic growth. So there was a huge trade-off, and each country, each parliament, each even organization, they had to take a decision what to prefer, the health of people or economic growth or consumption, let's call it, more than economic growth. On the other side, you have another huge trade-offs, we spoke before about it, is between helicopter money or market forces. And this is where you see this kind of hiatus between the market having a behavior that usually you will not associate to the biggest recession since 1929. They are behaving like if they're having data either from another dimension, but think the pandemic didn't happen, or obviously they are relying a lot on public intervention. So the question is, what kind of trade-offs you want to have there? You want to keep helicopter money or supporting the economy with your policies, or there is a moment in which you need to go back gradually to use the market forces to discriminate between the market players? These are not the big trade-offs. The third one is between going back to industrial production, level of consumption or CO2 emission as before, or using or taking stock of what we've seen in the last months, and maybe having a stronger approach to greening up the economy. And this is what in Europe and the UK is happening. I think there is, if you see the US, they have a different approach. They believe you should go back to industrial production and go back pretty much being even more lenient in terms of pollutants. So anyway, this is something that's creating a huge debate, and there are tens of these trade-offs. So the role of the politicians and the institutions would be to start calling out more loudly what and why some decisions are being taken.
So in short, do you think the governments or various governments could do with a chief risk officer or someone else along those lines to help out and make those decisions and look at those trade-offs? I guess you could argue there might be economists, but
yeah, I would say there is a role, not because obviously I would be interested to be a CRO of some big government, but because I think there is really, I think the risk management function is at the same point in which we were after the long-term capital management crisis and the Russian debt crisis and after 2008. There is a requirement to learn from what happened to maybe to gear up the way in which we look at risk management. because it's under the eyes of everybody that the risk of pandemic was there on the charts. And now we are seeing more and more plans that were into the drawers of governments, even on web pages. If you look at the UK government or the Italian one, there were pandemic plans ready to be used. So the question is that, do we really need maybe to have a more radical approach on how we manage risks, not only for financial institutions, not only for corporates, that they're doing that more and more. The Cambridge Center for Risk Studies published a very good report on that recently, how corporates are using more to have a risk function. And maybe I think we need to think about a CRO of state, or a CRO function of state in which there is an independent assessment of what are the top risks for a country or for a region and how you're going to address them, or if you're ready to start more scenario analysis also on management of the public bodies and politics.
There's so many things that I'm sure we could discuss more about, Cosimo, but yeah, it's been really interesting talking to you about all these things. I've certainly taken a lot from this. Is there anything else you'd like to ask me, or are you quite happy? I think we've covered everything.
Well, maybe I have a question to you as a recruiter, because I think one big element of the transformation of the speed of change is also that maybe new skills are required also in risk management. Did you see any change on the kind of request you have in terms of skill force?
Thank you. I mean, that's definitely an interesting question. So, I mean, long-term trends, I think risk, we're looking at more quantitative profiles on the whole. So my advice for anyone who's relatively junior, who's watching this and looking to build a career in risk, certainly quantitative skills are great and in demand. And I don't think with the evolution of big data, I don't think they're ever going to go away. On top of that, I guess if you're talking about financial institutions and banks in particular, we're always seeing continued capital reporting, enterprise risk and prudential risk, hiring. I think the world is evolving. Operational resilience is something that's key as a key topic at the moment, but I think that is quite a small profile in terms of how many people actually are doing and specialising in operational resilience. And typically they focus on individual areas within the firm. And of course, finally, credit risk and credit analysis. I think there's definitely been a trend again towards automation and more sort of risk models and reviewing models. I still think there's a need for human analysis and having opinions and discussion. And I think people actually discussing the facts is good and key. So yeah, and of course we've got no idea about where people are going to be based and in locations. It will be interesting to see in terms of whether firms decide it's okay to have people based away from their main hubs and cities in other locations in that country or other countries. I think the future will be very international and potentially fairly mobile as well.
Yeah.
So thanks, and Lou, it's been lovely to talking to you. I think we're coming up towards the end of our time. So look, thank you so much. It's been my absolute pleasure, Cosimo, having a conversation with you and hearing about what you've had to say. I'll include a link to Cosimo's LinkedIn profile on this link. And again, thank you so much. Please do like, follow, share, and thanks again for your time for listening. Thanks, Cosimo.
Thank you very much. Bye.
Bye.